Phil LeBeau joins us now with a special guest. Hey, Phil.
Hey, Joe. Ed Bastian, CEO of Delta Airlines. Ed, let's start first off, because some people are going to wake up this morning and they'll say, it looks like Delta missed on its first quarter on the top and the bottom line here, a nickel shy of estimates. But as we were talking beforehand, you say, look, we were pretty clear about our communication with the Wall Street community in terms of what to expect.
Yeah, well, it's not a miss in my opinion, and maybe you'll have to talk to the analysts about that aspect. They missed, we didn't miss. First and foremost, our team did a great job in a very, very volatile quarter. We always know the first quarter is the seasonally weakest quarter of the year for the airlines, and I think our results are really, really solid. Revenue's up 45% year over year, so I'm not sure how you come to a miss relative to that. Importantly, profits were in a right in the midpoint of our guidance range that we gave at the start of the quarter. And when you think about the challenges of the quarter, I suspect we'll be the only major airline that's meaningfully profitable within the quarter. And the bigger story of all is our cash flow. The 10 highest booking days in our history, all within the March quarter. Free cash flow after CapEx of $2 billion within the quarter. So this franchise is intact. The health of the franchise is doing quite strongly, and we're really getting ready for a strong summer and spring season.
Let's talk about the Q2 guidance, well above what analysts are expecting, both in terms of earnings as well as the revenue outlook. You know what you hear what people are talking about, whether it's on our air or elsewhere. The concern is that demand is waning. Do you see demand waning at all in terms of people looking to book a ticket, looking to travel?
Not on Delta. We're forecasting our second quarter revenues to be up mid-double digits, in line with the capacity growth that we're planning to bring into the market over the course of the second quarter. That'll be our highest quarterly revenues in our history. International is going very, very strong. Domestic is healthy, too. I don't want to indicate it's not, but international is clearly the place where people are trying to get back their experiences that they lost over the last several years, and that demand is really strong. The other thing to me that may be the most interesting point of the entire guidance is that we're forecasting an operating profit of $2 billion in the second quarter, which would be exactly what we made in the second quarter of 19. So from my standpoint,
on lower capacity.
On lower capacity, higher fuel prices, our labor rates are all fully in. We're the only airline with all the new labor contracts in place. So I think the setup for this year is looking healthy. And I know I'll be asked that question 100 times over the course of the day. But, as far as we can see, it's really strong still.
You also have guidance into consumer spending through your relationship with Amex and the Amex card. Do you see the consumer spending slowing down? Do you see a caution creeping into the consumer?
No, really not. I mean, there may be in a couple demographics, and certainly not anything at the top level that's a trend. Maybe it's stabilizing rather than continuing to accelerate. But we're in the experience economy, and people want to get their experiences back. They've gone 3 years without having the experiences they want, including last summer. If you think about last summer, we were still in a position where people were having to test to get back into the country or to go other places. Still a lot of uncertainty around COVID. We're through all that. And so I think, and I've said this to you in the past, I think we're in a multi-year recovery from the pandemic that's going to be well above anything anyone expects.